Yeah, what's going on, people? Coming to you once again, do another, informal video, looking at several charts. Going to explain to you why this hype around, the food prices. A lot of people are online on social media, warning people about how food prices are going to go astronomical. I don't get into feelings; I get into charts. So we're just going to look at some food prices charts. Starting with the corn futures. And I've been seeing this with a lot of the agriculture charts. Um, just looking back, since 2008, you've been consolidating. This is you can argue this is some bullish consolidation. Really, just been in this range between 300 and basically like 781. You attempted a few times to break out of this range bullishly, and you failed, and you failed again last week. Um, you tested this resistance area, and really for the last 2 weeks, you've been rejecting it. Last week was a major rejection. And the next target really is 521. You break 521, your next target probably is 304 area. But this goes counter, the narrative that is being, spewed in the internets about, food prices going up astronomically. A lot of people are saying by the fall, food prices are going to be unaffordable for most people, or, mostly in that realm of narrative. And I don't have, any issue with people buying and stockpiling food. I mean, you can do whatever you want to do, but to come out in this, spew this narrative online, it just, when you look at these charts, it doesn't make any sense. Going to the next one. You're looking at your rice futures again last week. You're getting some type of, follow through to the downside. The candle's green, but it's really fall through to the downside. You have, again, another range that seems to be forming. Since this one's a little bit different, since '08, you can see that we didn't even test this out. Let me look at the candle close on the weekly on your rice futures. Your candle close was a little bit lower, about 1836. I guess these are by about a pound, or they're like bushels, or certain commodities, or southern agriculture has certain metrics of weight. I'm not that sure. I don't really trade these assets. Just looking at the stock, but you can see you've been in like in a range since 2008. They didn't even test the upper range, the high from 2008. So look at your indicators. Until you get above this line, is 1836. I mean, you could be testing this bottom again around 958 if you don't, get above this zone. That's been a history. And there's been a price action history of rice futures. I mean, going to the next one. Looking at wheat futures, and I don't know if there's more data on another chart, because this only has it from 2019. But this wheat, I was looking at the daily actually, like a few weeks ago, and I had this. What I thought was forming was maybe a center triangle, and no, it's just a double top. And you have broken the neckline, or you had a range. Either way, you want to, form it and book that range, and lost tremendous value so far. And you still have a lot more for your target to go. So my whole point for this video is like, this is why I don't listen to narratives. This is kind of the same thing you see within other assets like cryptocurrency, which I mostly focus on this channel. People, get they get into these assets, or they see the price accelerate, and they expect that acceleration to go nonstop. And I mean, that's just not how markets work. Usually, what's really going on now is the Fed is killing demand, and so in order to control prices of goods and services within an economy, the Fed's weapon is, interest rates, because we live on a debt-based system. So what that means is the more debt that's issued means more money's in circulation. And so the Fed has a, pivotal point within that debt cycle, that money creation, with how high the interest rates are. And so the fact that they're higher in interest rates right now means less money is being created. It means debt is more expensive. And you typically see this price action when the Fed steps in and, makes the, debt more expensive. And so while everybody has this narrative that, these assets, agriculture is going to continue and your food prices are going to continue to rise, I'm just showing you what, by the charts, like, this is soybeans. Like, it's not bullish. That belief that, food is going to go up astronomically is just, it's not founded within the charts. It's not true. The people that are coming out with these videos really, I see this a lot with YouTube, where there's a, main narrative, and it has, and the algorithm picks up that type of content. Those people get more views, so they do more content on that subject. And mostly, I really only saw a few videos, but I saw a lot of the titles, and I'm seeing a lot of like scare tactics with the titles, like, oh, they're coming, food shortage, and the food price, food prices are going to be so astronomically. And again, you just look at the chart and you look at your indicators. I mean, what I'm seeing a lot is you're having weekly RSI bearish divergence, and it's playing out to the downside. And I don't see, higher prices within foods. So here's oats. Here's this again was rice. Here's your cattle prices. Your meat industry looks a little bit. It hasn't broken down as much as, your wheats and grains and your rices and stuff like that. But you could see, just looking back, you were like consolidating for a while, and this consolidation really, since you had this impulse in 2014, you sold off and you start consolidating. Really, to put this trend line, I have the trend line wrong. Put it more like this, and you had a more like a descending broadening wedge type of pattern. Just a channel, maybe more so. Kind of barely broke out of it falsely twice. Didn't hit the measure move and broke back within the pattern and broke out of it bullishly. But maybe this is like a false move like here. It just doesn't look, I just don't believe in the narrative. Simply not because of what a farmer is saying. It's just, or what people are saying online, is just the chart doesn't say higher prices. This is your lean hog prices, like the bacon, pork bellies, all that other shit. I don't eat, I'm not even a meat eater. I'm a vegetarian. So, I mean, I know this will affect your milks and butters and other type of products, but as far as the meat goes, because those products come from your cows, but again, I mean, the feed, this is the feed cattle futures. So I guess it's like their grain or their feed. This is actually breaking out bullishly from this broadening wedge. So that's not a positive thing. But I've seen these type of patterns actually falsely break out and then only to end up breaking back down. I mean, back within the pattern. I mean, you could kind of use that as your trend line, but this makes more sense, honestly. You get more touch points. If I can actually move this trend line. I'm not really like going to go like do my typical analysis. It's just, really, if you look at the US 10-year, that actually on Friday had some, you actually had some buyers step in. Interest rates work inverse. So if interest rates are going down, that means they're buyers. If the interest rate is actually, accelerating to the upside, that means people are selling bonds. Friday, people stepped, there's some bond purchasers, maybe simply because they're looking for yield, whether they're like large pension funds or, large institutions looking for a return because the stock market has just been, big and solid with that, with every other risk on asset. But you had a real, sell off, well, a real buy in bonds on really Friday really showed up, but really last week, you had some positive developments right now within the bond market. Some buyers are stepping in. And I actually got to look at the monthly, because what I was looking at for the bond market was you have this resistance in the zone. But I was noticing that you're actually, and you potentially still are, developing some hidden bearish divergence, which would be positive for, if you're a bond investor, you might actually, not financial advice, but you might want to buy some bonds, because in the future, what this indicating is this might be a top for a while for the bond market. Unless something, policy-wise happens, maybe the Fed is going to reverse their policy. This closed at 3.145, and this closed at basically 3%. So you definitely are having some monthly hidden bearish divergence starting to form on your MACD and RSI. So that might be a positive development, simply because that might be indicating that soon the Fed might not be hiring interest rates, as long as people, they might, raise the rates a few more times, or maybe they'll be changing their policy soon. But this is most video was mostly to focus on, the food prices, and why I just, everybody that's coming out saying that food is going to go up astronomically, I just don't see within price action right now. It's just right now, as of right now, it's a myth. You look at, your monthly, I mean, this doesn't have enough data, but if you go to your other, charts that have more data, I mean, you're kind of right now, especially like with oats, you're at major support levels that if you don't, or you're getting near support levels, if you don't hold, you're going to be seeing lower prices. I mean, oats, looking at the monthly, actually did break out of its 2018 range. You didn't make the measure move either. I mean, if you use the Wix, you might be just back testing this range. You have something like coming back test 505. If you break back below it, I mean, odds are you're going to the bottom, back to the bottom of this range. I mean, it's typically how these charts play out. It's what I'm seeing within these markets. So if you're one of those people that really binges on that content and really believe that, these assets, your food prices are going to be going up astronomically, I mean, it's actually a good thing they are, these prices are coming down, but that narrative is just fake, and that's just what I'm seeing within price action. So, until my next video, hope we found this information useful. Peace.